So what exactly do we want out of these investments? Our mission, the way we've described it, is ultimately to create options for J&J. And in some cases, that becomes a full-blown acquisition. In some cases, that's a collaboration that leads to interesting insights. Sometimes it's just a very simple, we assess the technology, decide whether or not to do something with it. I think the interesting data that we've pulled out of this is that it's probably on the order for us 1 out of 10 or 12 companies that actually turns into an acquisition by J&J. The most common outcome from our portfolio is one of those other collaborations, not an acquisition, but license and some other kind of marketing and distribution in a certain market, or some other kind of collaboration. That happens about 60 or 70% of the time. So 10%, and this is the most recent era I looked at, so there's plenty of bracketing here, but around 1 out of 10 or 12 turns into a full-blown acquisition. More than 60% turn into some specific collaboration. And we have a number that have been successful. They make one of those pivots and head off in a slightly different direction, so it's almost equally likely that somebody else will acquire the company, either because timing wasn't right for us or because the company changed and went off in a slightly different direction. So there's an interesting dilemma for the strategic investor. We can tee up an era of investing and an era of progress and exit. If the exit is acquisition into our company, then we're starting on a 15 or 20-year process of trying to actually build a significant J&J business. And that's a much larger problem to solve than the simple exit.